Alright, on today's video, first announcement, I do have one spot available for the SMT Premium newsletter. I will put my email address below. Send me an email if you want to take that spot. So today I'm going to look at the stock market, what I think is going to unfold over the next year or two, and also the commodity markets. I think one market is going to be really difficult maybe not so much to make gains, but I think it's going to be hard to hold on to the gains because I don't think we're going to get a trending move. So it'll be one of those markets where you make a little bit, then you lose a little bit. You make a little bit, you lose a little bit. And then over time, you don't really accomplish much. So this is the S&P, and here's the problem. I think all the QE that central banks did as we came out of the 2020 recession, the COVID recession, produced this huge bull move that just stretched price way too far above this long-term. This is a 200-week moving average. Stretched price way too far above that long-term mean, and as we all know, markets eventually regress back to the mean. That's what happened last year. I'm not in the camp that says that we've started a long-term secular bear market and that, that's going to last for 5 or 6 years. I do think we're still in a secular bull market, but I think we're going to have a period of difficult sideways churn. In one of my recent videos, I did note that the transports confirmed the industrial, so we do have a Dow theory buy signal. Notwithstanding that, I really don't think we're going to get I don't think this is just going to come down, tag the 200 week moving average, and then we're off to the races again. I suspect my original guess was that this intermediate cycle that we're in right now might come up and maybe make a marginally higher high above this peak. We're trying to put in a second daily cycle low right now. Once that's over, then I would expect a third daily cycle. That would be where we would have the opportunity to maybe make that higher high, but I don't think it's going to be a sustained breakout above that. I think once this third daily cycle tops, and I do think it's probably going to left translate. Whether or not it can make a higher high remains to be seen. But I think once that third daily cycle tops, then I think we're going to have a really scary move back down into the next intermediate, and I suspect that'll also be a yearly cycle low that could possibly even retest these October lows. So I don't see a whole lot of potential on the upside. There might be some potential on the downside when we start that move down into that yearly cycle low, because like I said, I do think it's going to be a pretty severe move down. Probably will correspond with an acceleration or an intensification in the war in Europe. And then that would set the stage. It would clear sentiment, set stage for another rally. Maybe that rally could even come up as enough to retest the all-time highs. Small chance that we get a marginal breakout. Don't think it's going to be the beginning of a sustained breakout. Something like what we had here. This was a sustained breakout. I don't think that's likely. Not during this 4-year cycle. And then it's going to be due in the spring of 24. This 4-year cycle low came in the spring of 24. So the next one would be due ideally sometime in the spring of 24, spring or summer. And I think that is probably going to correspond with a recession and a lower low. I think it'll probably, for sure, will break below this intermediate cycle low right here. And maybe it's a really severe move down that could, maybe even test the 2020 lows, depending on how severe the recession is. Generally speaking, when I see a market stretch this far above the mean, it has to do one of two things. It either has to go sideways for a long time to work off that stretch, which kind of looks like what might be happening right now, or it needs to go a proportional distance below the mean. So we stretch really far above the mean here. I would think at some point we're going to have to stretch really far below the mean to balance out this stretch. So all in all, I don't think it's going to be easy to make money in the stock market, sustainable money. Let me put it that way. You can certainly have winning trades, but I think unless you're just really lucky at guessing these tops and bottoms, I think it's going to be hard to. By the time we get out here to this 4-year cycle low in 2024, I doubt there's going to be very many people that will have more money in their account than they did back here at this top. I think it's just going to be too difficult to trade, too hard to guess at these tops and bottoms, and then come away with a higher portfolio here than you had back here. I suspect your portfolio will, at best, will be even. And the goal in the S&T is to, try and get a couple of little base hits in here. At this point, we're kind of waiting for this third daily cycle to rally, and then we'll try and pick a top here and then maybe ride this down. We might be able to get a base hit or a double on this move down. So in the S&T, we might be able to come away with a little bit higher portfolio here, simply because I think cycles are the tool you need in order to navigate something like that. But even then, it's going to be really difficult to make any significant gains during this 4-year cycle, I think. So I think it's probably going to be, not until we get done with this 4-year cycle here, probably sometime in 2024, that'll be your buying opportunity, probably in the middle of a recession. And then I think we can get a trending move in the stock market again, where you can make some sustainable gains that will produce a long-term gain in your portfolio. So for stocks, I think it's going to be difficult. However, in commodities, and this is an ETF that pretty much tracks the CRB. I think it's a different story in commodities. You can see we had a huge trending move coming out of this, what I think is I know it is. It's a final bear market bottom. Oil went to negative. If that's not a bell ringing that the bear market in commodities is over, I don't know what is. And so we get this massive impulsive move that culminates with the beginning of the war in Ukraine. And then now we are moving down into the 3-year cycle low. That's what this was. Here's the 3-year cycle low, 3-year cycle low back here. We're moving down into a 3-year cycle low here. Possibility that it occurred right here with this marginal undercut. Maybe we have to make a lower low when the stock market puts in that next intermediate cycle low, which is going to be probably due in April or May, would be my guess. So it's possible that the CRB could get dragged down along with that, and we make that low. But once we get some confirmation that the CRB has completed that 3-year cycle low, then I think this is this area where you want to be invested, because this is the area that's going to trend and where you can make sustainable gains. So while stocks will be churning sideways, difficult to make money, liquidity is going to be coming out of stocks and going into, it's going to leave the difficult market and it's going to go into the easy market. So that's why I think this is where you're going to want to be here once we get some kind of confirmation that the 3-year cycle low in the commodity complex is over. And since oil more or less led this move, the second stage of a commodity bull market usually isn't led by the same thing that led the first half of the commodity bull. So this commodity bull was led by oil. I think gold, precious metals are going to lead the second leg of the commodity bull. And so not sure if the CRB in general has completed that 3-year cycle low, but I think the odds are pretty good that gold has completed its 8-year cycle low, and that's not unusual. Gold will very often bottom a few months before the CRB. So I think it's going to be difficult to make money in stocks. I think you want to be in the commodities here. We're just kind of biding our time, waiting to see if we've got a final 3-year cycle low. I really think the best opportunity for that, a slight possibility that it occurred here, but I think probably the best opportunity is going to be later this spring when the stock market gives us that very scary move down into the next yearly cycle low. That usually creates selling pressure that tends to infect everything, and I suspect it'll drag down the CRB with it. So that really good buying opportunity, that 3-year cycle low in the commodity complex, is probably still a month or two away. So you might want to just bide your time a little bit and wait for that opportunity. And then instead of trying to play a difficult stock market that's probably going to be churning sideways for another year and a half, I think you want to be in the commodity markets, and probably specifically you want to be in the precious metals. So once again, I got one spot open for the S&T Premium newsletter. The price is $75 a month. If you want to take that spot, I'll put my email in the description below. Just send me a note, and first come, first serve.